Energy making a lightning move higher today. Crude oil hitting levels not seen since July. Let's drill down on the big move of the day with Paul Sankey of Sankey Research. He joins us on the fast line. Paul, great to have you with us.
Hi, Melissa. Hope you're very well.
How sustainable is this move higher in your view?
Well, the time of year is what makes it so difficult to judge that. Obviously, being in September with everyone worrying about upcoming winter, it is going to be a big question about whether, over the next 6 months. But the themes here are all secular, too much dependence on wind, not enough investment in oil and gas production, and those are all sustainable.
Mm-hmm. When we hear the news out of China, Paul, that power plants are curbing supply and they're shutting down, et cetera, because of the lack of coal, what does that tell us? I mean, if you can read between the lines, what does that tell us in terms of investment opportunity?
Well, my comment was to buy Peabody coal, BTU, which we were saying a month ago. It's as crazy as that now, with energy policy leaving us so short fossil fuels, essentially, that you actually have to rotate back into coal. But obviously the big trade is in natural gas, and the need for natural gas to offset wind is a much more secular move in my view.
Paul, it's Tim. Interested to hear your view on OPEC spare capacity. It sounds like you think they may not have as much up their sleeve as they have in the past, and that supply shortages take us well into the middle part of next year.
Exactly, Tim. We published on this on Sunday. Basically, if you look at OPEC's production versus quotas, most of the countries are not meeting their quotas currently. And there's a very significant incentive to meet your quota, obviously, and even exceed it, because they're going to go through a renegotiation process on quotas. So no country would be voluntarily not meeting quota. But if you look at the combination of Nigeria, Angola, Malaysia, Oman, and several others, it's about 1 million barrels a day short. And that is another reason why everything's ripping today.
Paul, great to speak with you.
Thanks a lot.
Thanks.
Bye.
Paul Sankey, Sankey Research. Guy Dami, what part of the energy complex do you like right now?
Yeah, we talked about oil. Well, first of all, nat gas has been on fire. I mean, we don't talk about it enough. We probably should. But oil services, I think, is breaking out to the upside. I mean, Tim can speak to this. Look at the move in Halliburton, Schlumberger today specifically, but over the last couple of weeks, these stocks are breaking out. And I don't think people, and in my opinion, I don't think people fully understand how levered some of these names are and the potential for it to go higher. And Dan gave us a great chart a few months ago, this 13-year crude chart that showed us touching to the penny crude oil on a 13-year downtrend. Well, guess what? We're precariously close to breaking through that. And if and when we do, I think these names have another 20 to 25% upside easy.
Yeah, it was interesting to hear Paul, Tim, talk about the reasons for the energy spike, all secular at this point. It's none of this OPEC sort of stuff, supply, demand, hurricanes, what have you. It's secular.
Well, they're short term, and they're almost incongruent kind of secular themes. In other words, let's not invest in carbon because we want EV and renewable to be the wave of the future. So, in fact, it pushes up their prices and makes the investors more interested in investing there. It makes sense. The secular trend, I think, around companies, and I've said this so many times, but it's really important to understand, oil companies are not doing that transaction, that M&A event that was growth at all costs anymore. In fact, management teams, maybe most importantly, are incented to do accretive new deals. That's why you want to be an investor, not a trader.